In this video, we're going to talk about investing in mutual funds. We're going to go over the math that'll help us to see how the value of a mutual fund may change over time given its performance. Now, you might be wondering, what is a mutual fund? Put simply, a mutual fund allows you to diversify your investment into multiple companies. Let's say if you're investing in an equity mutual fund that specializes in stocks, rather than just risking your investment in one stock, your investment is placed in many stocks. And so mutual funds, by that definition, is less riskier than investing in individual stocks. So it allows you to diversify your investment across many companies as opposed to just one. Now, there are many types of mutual funds. Some mutual funds invest in bonds, others track an index, also known as index funds. And so you have a variety of different types of mutual funds out there. But in this video, we're just going to focus on the math portion of it. So let's work on this problem. Barry invests $10,000 in a mutual fund. If the value of the mutual fund grows by 8% each year, how much will it be worth after 10, 20, and 40 years? So let's see the effect on time. Let's see the effect of time on the value of a mutual fund. So the formula that we're going to use is this formula. So the future amount is going to be equal to the principal times 1 plus r raised to the t. So Barry's investing $10,000. R is the interest rate, which by definition that will be the same as the amount that the mutual fund grows by. Let's assume this is the net growth after fees and expenses. So 8% as a decimal, you need to divide that by 100. That's 0.08. And so this is going to be active for 10 years. So that's going to be 10,000 times 1.08 raised to the 10. So after 10 years, the investment will be worth $21,000 rather, $589.25 if you round it. Now let's see what's going to happen if Barry keeps the money in a mutual fund for 20 years. So using the same formula, it's going to be 10,000 times 1.08 but raised to the 20. So after 20 years, the value of that mutual fund, assuming the growth rate remains the same, is going to be $46,609.50. Now let's see what's going to happen in 40 years. So we're going to change the exponent from 20 to 40. So in 40 years, the value of his investment is $217,245 and 22 cents if you round it. So notice the effect that time has on his investment. If he keeps his money in a mutual fund only for 10 years, basically it doubled in value, so to speak. It went from 10,000 to 21,589. But if he kept it for 20 years, the value increased by approximately 4.6 times his original investment. So it went from 10,000 to 46,609. But note what happens if he keeps it for 40 years. The value of his investment is $217,245. So it increased by a factor of 21.7 times his original investment. This example really illustrates the value of investing over time. It really illustrates the effect of compounding that it has on an investment. The longer the investment is active, the greater the time period, the greater the growth will be. His investment increased by a factor of 21.7 times his original 10,000 investment. And let's see what's going to happen if he keeps it for another 10 years. Let's say if he holds the investment for 50 years. So it's going to be 10,000 times 1.08 raised to the 50. And in 50 years, it's going to be worth $469,016.13 if you round it. So now it's 46.9 times his original investment. So thus you could see how much time plays a role when it comes to investing. The longer you invest, the greater the return will be. Now let's look at part B. If the value of the mutual fund grows by 12% each year, how much will it be worth after 10, 20, and 40 years? So part B will illustrate the value of the rate of growth over time. So in the first example, the performance of the mutual fund was 8% each year on average. In the second example, the performance will be 12%. So let's see how those numbers differ versus what we were able to achieve with an 8% return. So let's start with 10 years. So it's going to be 10,000 times 1 plus 0.12. So let me write this out just for the first example. So it's 10,000, 1 plus 0.12, that's 12%, and then raised to the 10. So you could simplify this to 10,000 times 1.12 raised to the 10th power. And so in 10 years, the value of his investment is going to be $31,058.48. So I'm going to use the same color so that it corresponds to what we see here. So notice that with an 8% return, his investment nearly doubled. But with a 12% return, his investment nearly tripled. So the performance of a mutual fund is very important when it comes to investing. A 12% return will have a much greater effect over time than an 8% return. Now let's see what's going to happen over 20 years. So it's going to be 10,000 times 1.12 raised to the 20th power. And the value of his investment is going to be $96,462.93. So now the value of his investment is 9.6 times his original investment. Compare that to 4.6. That's a big difference. Now let's see what's going to happen in a 40-year time frame. So once again, it's going to be 10,000 times 1.112 raised to the 40th power. So over 40 years, it's going to be $930,509.70. So now his investment is 93 times more than his original investment. So think about that. If he would have put $10,000 in a mutual fund that grew 12% each year on average, now granted, sometimes the market goes down and you have down years, but let's say on average it earns 12% each year. He could turn that $10,000 into $930,000 in a 40-year time frame. So 40 years is a long time, but nevertheless, that's a significant return. So hopefully you understand the value of investing over a long-term period and also the importance of getting a bigger return rather than a smaller return. Thus, when investing in mutual funds, two things you should consider are the performance of the mutual fund on average, and also the time in which you want your investments to run. The longer you keep your investments working over time, the greater your potential return will be. So that's it for this video. Hopefully you found this to be helpful, and thanks again for watching, and don't forget to subscribe to this channel.